We're really pleased with the profit performance, nearly $1.4 billion of operating profit. Inevitably, as our mines get older, we have to go deeper to find new diamonds. And also, as we look to extend the life of our existing mines and develop new mines, there's a need for us to invest a significant amount of capital expenditure. So it's vitally important that the business is profitable to enable us to invest in that expansion, to invest in extending life of mines, and to be able to dig the diamonds out from deeper mines. Exchange rates are important for De Beers. We sell in dollars, so our pricing is in dollars and most of our revenue is in dollars. But a large amount of our costs are in different currencies, in particular the currencies of our mining businesses in Southern Africa and in Canada. And some of those exchange rates weakened by more than 10% against the dollar. And that did boost our profitability quite significantly last year. Over the whole year, our rough price index moved up by about 7%. In 2014, we saw underlying prices stronger than they had been in 2013. Overall, though, our average dollar per carat was flat at $198 per carat. With the increase in prices, that was somewhat offset by a slightly weaker mix that we achieved in 2014. Our overall group sales at $7.1 billion was up 11% on the previous year. By far the biggest element is our rough diamond sales. That was $6.5 billion, up 12%. With the average price that we achieved effectively being flat, our volume growth was 12%, contributing to that increase in sales. So that drove the biggest part of our profitability improvement. I mentioned exchange rates, and clearly that was a significant factor as well in giving us that 36% increase. Various different things that impact upon production costs, inflation in general, but also additional mining-specific cost inflation, which particularly impacts us in areas like labour costs in Southern Africa, where we see some fairly strong increases in those costs. We were very pleased to keep our overall unit cost of production roughly flat. We clearly benefited again from exchange rates, which offset much of the inflationary pressure. There's probably two major impacts for our business. First of all, for consumers, particularly in the United States, our major market, if they're spending less at the gas pumps, then hopefully they have more available to spend on other purchases, and diamond jewellery should definitely be one of those. Obviously, fuel prices are a significant part of our production cost as well, and with oil down at the level that it is now, we see some helpful improvements in terms of our cost base, although not hugely material to our overall profitability. Our capital expenditure in 2014 increased to just short of $700 million, and that increase over the level in 2013 was driven by us starting to spend more on our two major expansion projects, the Venetia Underground project in South Africa and the Gahcho Kué project in Canada. Looking to 2015, we probably will spend between $800 and $850 million, so more again as we develop those new projects. Our sights were set on an overall return on capital employed target of 15% by 2016, and clearly we were delighted that we were able to achieve that level already in 2014 after the previous year achieving a level of 11%, so a really strong improvement there. Having said that, it will be a challenge for us to maintain that performance, and that's what we're all set on doing. And as we continue to invest in our expansion projects, clearly the amount of capital on our balance sheet will go up, and we'll have to work harder to earn the same level of return. We believe, first of all, that our challenge will be to maintain return on capital employed at the current level, given the increased investment in our new projects. We believe that the market will continue to see growth over the course of this year, although clearly with some softness in some of our markets, we are cautiously optimistic, I think I would say. For production, we would estimate production at the range of 32 to 34 million carats for 2015, albeit subject to the level of demand that we see in the market. So in 2014, we invested $37 million in exploration activity, and we continue to believe that exploring for new sources of diamonds is vitally important for the long-term livelihood of our business, and we see demand continuing to grow into the future. And so the fact that we need to invest so that we can replace our existing mines with new production in the future is very important. So we continue to invest at a similar level. In 2014, our profits contributed 28% of the overall Anglo-American group profitability, clearly a very significant contribution, and at a time when many of Anglo's businesses were experiencing severe headwinds in terms of lower commodity prices, it was clearly very important for the group that we performed as strongly as we did.